There we go. Let's take it back. Hi, everybody. My name is Jennifer Hume. Thank you so much for showing up today at the Profitable Agent. I am a certified Profit First professional, own Coronation Bookkeeping, the Profitable Agent, which is why you are all here today, as well as Profits Consulting. We want to introduce our special guest, Michael Domenichetti. Michael, thank you so much for being on with us today.
Oh, you're welcome. Always a pleasure to be here.
Yeah, I love it. Michael is an amazing real estate agent in the Burlington Waterdown area, and he works for Keller Williams Brokerage. I see we've got Paula on here as well. I'm sure we'll have more people come through the next hour and a half. So, Michael, I'd love to know. Oh, Paula, that's totally okay that your camera's not working. It's not a problem. We're so happy that you've been able to join us today for as little or as long as you can. So that's awesome. So today we're going to be going over a couple of things. One, I'm going to be sharing new information about our awesome new website, as well as some amazing training content that we have. Also, we're going to be talking about some tax tips, but I'd love to know, Michael, how are you finding 2024 in the real estate market right now?
So far, so good. Actually, the month of December was seasonally slow and maybe even a little bit more so just because of the tail end of last year with all the interest rate changes and whatnot. I feel like that's kind of settled down now. And, with all the predictions that we're seeing with interest rates, most likely going to be coming back down here over the course of the year. It's bringing buyers back with some confidence to the market, which is nice and very interesting. I'm a part of a bunch of Facebook real estate agent groups, and yesterday somebody posted in Mississauga there was a house that was listed for sale, and they priced it very aggressively, i.e., they priced it below market value, and they had 85 offers.
Wow.
Yeah, which we haven't seen that kind of craziness in quite a while. So I wouldn't use that as a benchmark to say, multiple offers are back and the market's hot and blah, blah, blah. I wouldn't say that. However, to me, what I get out of that is the fact that there's 84 people out there that still want to buy a home in that area. So we do have a large number of buyers who are wanting to buy, who see the value in buying, who have the capacity to buy, and they're actively looking right now. So I'm seeing the same kind of thing, even, the areas that I service. We've noticed there's been an uptick in showings in the area for listings. As far as, the number of homes being sold compared to inventory, it's fairly consistent where the number of homes being sold is kind of matching the same number of homes that are being listed for sale. So the inventory is remaining relatively balanced at this time. So it's nice. Like we have a nice steady pace with the market. It's not, oh my God, house got listed for sale. We have to go see it tonight or it's going to be sold by 5 o'clock. We don't have that going on, which is good. It's just a nice steady pace, which I really appreciate.
Yeah, definitely. What are some of your maybe predictions for 2024? Where do you see the market going this year?
I feel we will see a steady market throughout the entire year. I feel that once we get to the April announcement from Bank of Canada, which is April the 10th, that if they do make a downward change to the Bank of Canada rate, which is what everybody is kind of indicating, that we will most likely see about a quarter point drop. I think when that happens, buyers are going to come to the market pretty feverishly at that point. So what I see happening is a pretty traditional spring market for real estate, which is kind of like starting up in March and April, May, June, those 4 months. Typically, I do about 50% of my real estate business in those 4 months.
Wow.
So I can see that being what the market's going to look like this year. Overall, I can see prices maybe increasing a little bit over the year because of interest rates coming back down. There's that teeter-totter of affordability with interest rates versus price versus what people have to spend per month. So I feel like we're going to see a pretty balanced market overall with a little bit of heightened activity through the spring, which is, again, very normal.
Thank you so much for sharing those insights. Now,
Yeah,
today
you're welcome.
we've decided that, since it's a new year, December, we talked about really setting yourself up for success in 2024 and what that really looks like. And it's some small habit changes, for example, like just taking 1% of your earnings and putting that in a separate bank account to help towards saving for office expenses, whatever have you. But as we're in 2024, I'd love to know, do you feel, or actually, sorry, what do you feel real estates could really benefit from? What are some good tax tips that you see commonly in your industry that you feel like you could say, hey guys, like if you just do these one or two things, it's really going to make a difference for you, especially when you come between April and June, depending on when you have to file your tax return. You're on mute, hun.
There we go.
There we go.
All
Thank you.
right. I would say planning in advance, right? I'm a big proponent of everything being done months before you actually make that decision or need to make that happen. So, everything that we're doing now is stuff that we had planned months ago. So, one of the big things for me is just having the multiple bank accounts. I think that having the 4 bank accounts within the business is such a critical thing so that when it comes time to pay the taxes, you've got the money sitting there ready to rock and roll. It's really hard to do. I make it sound like, oh, it's no big deal. You open 4 bank accounts and everything's going to be wonderful and easy. It's not that easy when you're getting started because, you've got to plan ahead and, having a really good budget, I think is also part of the overall thing to make sure that, you're living within your means. And, if you get a commission check for $10,000, you don't go spend $10,000. It took me a really long time to understand that. I'm a very slow learner, apparently. And, I realized that realistically, for every dollar that I earn, I get to spend 25 cents. So between taxes and HST and expenses for the business and everything else that you have to plan for, realistically, if you can set yourself up so you're actually living like you're paying yourself and you're using that money to pay your mortgage and your taxes and or your mortgage and your food and all your other living expenses. If you can figure out how to live off of 25 cents of every dollar, then the rest of it kind of falls into place and it's pretty easy.
How do you find that you're able to live on 25 cents on the dollar?
Make a lot more money. But it's
That
aware.
is a good suggestion. It's
Well,
interesting.
it's an awareness thing, right? So I used to think, if I need $10,000 a month because that's my expenses, right? So that's my mortgage, my property taxes, my heat, my hydro, my kids go to, dance and horses and food and all that kind of stuff. I'm like, okay, well, if I need $10,000 a month, I make 125 grand a year and life is peachy. That's not how this works. For me to be able to live off of $10,000 a month, I need to make 250 grand a year minimum.
Yeah. Which is almost what over double what you had originally thought, right?
Exactly.
And why is that? Why do you feel that there's such a difference between what you feel you need to take home, but what you actually need to bring in order to be able to take that money home?
Well, there's a lot of money that goes to other places right off the top. So if you look at kind of reverse engineering this whole thing. So if we use the example of $10,000 a month, that's $120,000 a year. You take the $120,000 a year and you tack on 15% that's going to go towards taxes, right? So there's another, call it $25,000 just as a rough number. So now your 125 turns into 150. Well, you also have to have about 25, call it 20 to 25% of whatever you do to operate your business is going to go towards your expenses for your business. So you have your money that goes to the brokerage, you have your insurance, you have, any courses that you take, you have your cell phone, you have your gas that goes into your car, your business cards, every time I list a property for sale, it costs me probably close to $1,000 between photos and staging consultation plus incidentals. So start adding all those costs up, you're into another 20 to 25%. So there's like another 25 to $30,000. So now we're up to like 175 grand. And that's just the bare bones basics. Like I haven't even considered any additional things into that. So
Well,
that's
one thing you
why.
haven't mentioned is paying HST too, right? So like one thing you have to keep in mind too is that if you're an agent earning over $30,000 in commission every year, you're required to have an HST number. And so therefore you have to be able to file your HST return. And so it's great if you get those small commission checks. And oftentimes we see realtors get in the trap of maybe spending too much money. In my experience, I've seen realtors go, "Hey, I just got my first $20,000 check. I'm going to go buy a Tesla." And you're just like, please don't. Oh my gosh, please don't. Right.
Yeah.
But, you know, people often don't think about the fact that they've got the personal taxes and the HST. And so I kind of thought this would be a great idea for us to talk about these things today because believe it or not, like it's January is a great time to talk about taxes. We've got everybody needs to file by April. Everybody's brokerages will start rolling out their T4As in the next 30 days. And so we know that the pressure is going to be on for everybody here, whether or not you have saved money for your taxes. Regardless, we don't want to stop you from moving. No, I gotta take that back. Gonna take my thought back. What we want to do is we want to help make sure that next year you're not in the same place that you are this
Mhm.
year. And so we really want to focus in on taking away that overwhelm, taking away the financial burden, the financial overwhelm that seems to happen this time of year. And so I would love to share some tax tips of my own. I think what Michael has said is completely the financial building blocks that you need. And I think that's something that Profit First teaches. It's just like grandma's old envelope system, right? We need to make sure that we have that good foundation. And how we do that is making sure that we have just even 1% in a savings account. We make sure that you guys understand what expenses you can and can't write off. And just so you guys know, later in the call, we'll have a download for you guys to know, so you can download the attachment. It'll show you what you can and can't write off in your business because I have seen some interesting write-offs in my day. I've seen people try and write off personal trips. I have seen, you know, lots of guys going to get shaved or get their hair cut. Unfortunately, those things are not write-offs. But one thing I would say as far as your taxes are concerned is if you can start with that one bank account with that 1%, I highly recommend that you do that. Of
Mm.
course, I'm going to say start with more than that. I know I'm up to 13 bank accounts in my business alone, let alone the amount of bank accounts I have in my personal world and in my real estate investing world as well. But I just find that getting intentional with your money is so important because you know, it's interesting. Before Profit First, I had like over $20,000 in credit card debt, and I could never understand how I would throw a whack of money on that card every month, but somehow the balance never seemed to shrink. And so it's interesting now that I've compartmentalized my money. I don't take money from my HST account to pay my Visa, right? I make sure that it's my operating expense account or my computer software account, whatever have you. And that helps me drill down on where I'm overspending. So it actually forces me to pay attention to my business a lot sooner than I would have should I normally just be looking at your financial statements, which I think as business owners, we kind of tend to bury our head in the sand when it comes to that kind of stuff. And so I just encourage everybody here, if even if all you do today is just open up one extra bank account, totally okay. You know, we're not here to hold your head over the flame. But I do think that getting intentional with your money for me and my clients, I've seen it make the world a difference for them. And I know that that's something that we're going to be teaching in our course is just the power of being intentional, the power of intentional, sorry, the power of being intentional with your time, the power of being intentional with your money. And so I love that. I think that as someone myself who, I don't know how many people know this, but I've lost 137 pounds myself so far. I'm still on this crazy weight loss journey, probably got another 50 pounds to go. But I think for me, profit first really hits home in that regard, because the way that I've been able to lose the weight is by changing my portion sizes and going with smaller plates. And when you really read the profit first fundamentals, those are some of the things that Mike Michalowicz really talks about is making sure you're taking your good things first and eating your good things first. And so instead of having a huge Christmas dinner on your plate, maybe what I'll do is take a small plate and have my veggies first and then go back for seconds for the turkey and for the other things that are going to fill me up. And so that's kind of like the intention behind these bank accounts. So Michael was talking and saying that he has 4 accounts. I have 13. There's no right or wrong answer here for how many bank accounts. I think if anything, it's the more intention behind it. So if you want to get to 30 bank accounts, like, oh my gosh, right? I think it depends on your goals and your business goals. But for me, that is something that really hit home, was those small habit changes. That's something that has helped really resonate and change my mindset when it comes to weight loss and when it comes to financials. I'm someone that never used to worry about having 2 dimes to rub together to worry about tomorrow. But since Profit First in the last 4 years, since implementing it, I've been able to pay off the credit card debt that I was telling you guys about. I regularly pay my credit cards now, so I never really carry a balance. Although I did pay for a training thing for one of my employees, but that's a whole other thing. Governments take a long time to pay you back. But the nice thing is, like, it's nice knowing that I also reward myself and I pay myself as the business owner. I think all too often as business owners, we forget that we are our hardest working employee. And so we think, oh gosh, this needs to get paid and this needs to get paid and this needs to get paid. And then we're kind of left scrounging for whatever's left. And especially as real estate agents, where, it can take a long time to convert leads in this business. It seems like the benchmark is around 2 years for conversion leads. Maybe you can correct me on that, Michael, if I'm wrong, but it does
Mhm.
seem like more often than not, people, by the time they start making momentum in their career, they're getting so frustrated because of the financial burden and because of the time burden that's put on them. And so what we look to do is coach you guys through calls like this and really help take away that overwhelm with systems like Profit First and helping you in your time management. Because it's amazing what getting intentional can really do.
Well, inside Keller Williams, there's an idea and even a course called E to P. And what it means is moving from an entrepreneurial mindset to a purposeful mindset. And specifically, what that refers to is 90% of the people out there, not just in real estate, but business owners as well. I'm talking about, electricians and plumbers and hairdressers and all that kind of thing. Often they run as entrepreneurial and they're very good at their craft. They're very good at what they do. When it comes to keeping their business organized, they really struggle. So basically, they're just putting out fires all the time. They're flying by the seat of their pants. There's really not a lot of structure. And, the money comes in, the money goes out. They don't really track or understand where it's all going. And you just feel like a hamster in a wheel and you just keep spinning your wheels. And it's very stressful. It's very stressful to run your life and your business that way because you feel like you're constantly chasing that next deal, the next client, the next paycheck, instead of being very purposeful. And that's what we're talking about here is having a plan, having the bank accounts, being very purposeful about where the money comes in from, where it goes, and just having an overall plan for your business, week by week, month by month. And just as an example, I closed the deal on January the 5th, and I got paid last Friday, which was what, the 23rd, 4th, 5th, something like that. So it was 3 weeks between when the deal actually closed and when I got paid. And we sold that house back in early October. So, there's a very long lag as far as when we do the work to when we get paid in this business. So, it's really, really important if you want to remain solvent in your business, which is profitable. And without a plan, it makes it very hard to do that because you're constantly scrambling. So, I think it's really important to have a plan and, to think of your checks that you get, because we do get paid fairly large amounts of commission. It's just very infrequent. Like Mike McCallowit says, think of it like a tube of toothpaste. We get paid in these large chunks, which is like getting a brand new tube of toothpaste. And what most realtors do is they just take that tube and go, and like the whole thing comes out all at once. And then, you go to brush your teeth a week from now, you're like, crap, I don't have any toothpaste left. And you're like cutting the tube open and scraping the toothpaste out of there because you're trying to go with as far as you can with, these little tiny remnants of toothpaste that are left in the tube. So, the profit first idea is you get a brand new tube of toothpaste, and instead of just gobbing it on there, you're being mindful about taking small amounts and making it last as long as you can. And the best way to do that is when you get that tube of toothpaste is you break it up into multiple buckets so that you have it distributed. And I really like that mindset and that sort of analogy, because when you start looking at your money that way, instead of being like, oh, I got this $10,000 check, I'm going to pay off my credit card and go shopping. It's, hang on a second, I'm going to pay off my credit card. And I also have to make sure that I can pay those bills for the next 2-3 months, because I don't know when my next commission is coming in, or I do have a closing, but it's going to be another 3 weeks after that. And I still have to buy groceries and pay my cell phone and all that stuff in between. So I like that idea and the mindset of looking at things that way.
Yeah. I think it's just, again, the power of intention, right?
Mhm.
It's kind of like when you set out to become a realtor. I mean, you have to get purposeful and intentional with who you're calling. If you're going door knocking, how you're getting those leads. It you should be tracking things intentionally too, right? And so
Mhm.
same thing with your finances. I think all too often that we work with clients that at the end of the year, they look at their financial statements and they just are like, okay, where did all that money go? Even if it shows that you've made profit, they're like, but there's no money in my bank account. And so where did that money go? And the cool thing about Profit First is I can open up my banking apps. So I have TD or RBC, whatever, depending on the situation, right? But you open up your banking app and you can, at a glance, you can make a business decision based on the balance that's in an account. That is a very powerful thing to do. And I think in the 21st century, that is something that is mandatory. Like we need to be able to run our businesses in that regard. And so it's nice to know, for example, that if I need to pay one of my staff a bonus today, I look at my payroll account. If I have the funds in there, I can pay it. If I don't, then I don't pay it, right? And so same thing with paying myself for my taxes. I know that I don't have to worry about paying for HST because that money is already set aside. You know what? One thing that I find too with it's a very common in the real estate industry, but I think it's just common in business altogether. We call it the revenue trap. And this is where we think that we just need one more house, one more sale. We need one more this, one more that, right? And often we think that if we can get to the next level or this dollar amount or whatever it is, that all of our
That's good.
financial
Fix all the
problems are going to be
problems.
right.
Yeah.
And we're going to be
Yep.
amazing. All of our financial problems are going to be solved and life is going to be awesome. And it's all of a sudden our habits are going to change and we're just going to be phenomenal, right? And so oftentimes what happens is you get a lot of the expenses that go along with that. So whether it's your employees had to work overtime, your VA had to work maybe a couple extra hours for you, maybe you didn't get to spend time with your family, maybe your wife is like yelling at you because you missed another one of your kids' soccer games or hockey games. And so it's all about the power of intention. And so that's really what we aim to teach here is just being intentional with your time, intentional with your money, and really understanding where your money is going and being able to use your bank accounts as a tool for wealth building. Now, in saying wealth building, we are not a get rich quick. I'm never going to say that. It takes us a long time to get where we are, and it's going to take us a long time to get us out of that. And so, unfortunately, if you're looking for that like instant gratification, get rich quick, this is not for you. Like, we are not the program for you. We are not the people that you want to talk to, because we don't want to work with people that have that mindset. We are working with people that have the idea, similar to the investors that I work with and the real estate agents that I work with, is that long-term wealth building. So it's not going to happen today. It's not going to happen tomorrow, but this time next year, holy crap, are you going to notice the difference? Yes, you are. I just, for example, one of my clients who is now this is not your industry, but this is one of the best results that I've experienced so far. One of my dance studio clients owed her dad almost $1 million. Can you imagine, honey? I need to borrow money, Dad. Give me $1 million. $1 million. She and I worked together like crazy over 18 months. And within 18 months, we turn around and paid back her dad $200,000. If that's not a win,
Wow.
I don't know what is. Now, again, that is someone who is very intentional with their time, very intentional with their money now. And she makes sure that she gets paid what she is owed. And so, I know that, again, that's not a real estate agent to give you that kind of example, but I just want to show you that the power of intention can happen at all levels. And the cool thing is, this is like, she did that while going through a divorce. Like, so I feel like that is something to be complimented. And I've seen other real estate agents, I work with Michael, actually, just so everybody knows. And I've seen the power of intention that he has. So he sets those multiple bank accounts and he makes those regular transfers. I work with so many different agents across Canada that I see that this happens. I've worked with some agents that earn, $500,000 plus a year, but they still have mindset issues around never having enough. And so it's awesome to see the transformation that comes along with implementing those multiple bank accounts. It might sound like the silliest but easiest thing, but it really, really is, isn't it, Michael?
And one of the funny things that happens too is as you earn more, you have this feeling, oh, I've got more money coming in, so I'm going to go spend more because it's all lumped into one gigantic bucket. So you don't really have a good handle on, what's coming in and what's going out until you break it apart into those separate accounts. So, for example, if, there's a marketing thing that you see as good value and you really want to invest in, or a coaching thing, or, a trip that you want to go on, or a seminar, there's this thing where you're just like, well, I've got this commission coming in, so I'm just going to go and invest that, $5,000 into that thing because I think it's going to be good for my business. And there are a lot of good things to invest in. However, what happens when you don't break things apart and you don't plan for those things accordingly, you invest that money and then the next month goes by and you're like, oh shoot, I don't have enough money to pay my cell phone and my car payment now because I've invested my money into something else. So by being intentional about it and having the account set up, and you can say, okay, well, this, I'm going to keep 30% back in my business to have to pay my expenses. And you look at the numbers and you understand that, well, if I want to invest that $3,000 or $5,000 into that thing, I have to actually make 4 times that because 30% of what I make goes towards paying my expenses. So if I know that I have this steady business coming up and I want to invest an additional 5,000, like whatever the number is, I have to make 3 times that. So I have the extra money available to be able to invest in that thing. Right. It's not, oh, I just need to make an extra $3,000 or $5,000 to cover that cost. It's no, I have to actually make $12,000 to $15,000 more to be able to invest because I'm only taking 30% going towards my expenses. And for me, that was like a really big mind shift for me to get around because it was always, well, I just need to do one more deal. Right. We say this all the time in real
Yeah.
estate where it's like, well, I want to buy a car. It's, $25,000 because I'm buying a used car and, my average commission is 25 grand. I just have to do one more deal. And that's a trap that we fall into as realtors where it's this one more deal mentality because we don't break out exactly what those numbers are because we need to account for not just the money that we need for the one purchase, it's all the extra things that go along with it, because now you have to pay more HST, you have to pay more taxes, you have to pay all of that stuff.
Yeah.
Michael just asked a question. Good morning, all. Are all of your bank accounts within your PREC? That is a great question. So I do have a PREC is a personal real estate corporation. I do have a personal real estate corporation for myself, and I'd have to double check if all my accounts are within my PREC. I'm 99% certain that they are within the business.
So, and I'll give you the more technical answers. So, when you have a PREC, it's dealt with like a corporation. And so it definitely is recommended that you have at least like a checking account, a savings account, and a credit card account in your PREC. The reason for that is because it's treated like a corporation, any personal funds that you take out. So, for example, if you have one credit card and you use it for personal and business, and there's going to be that mix on there, you actually end up paying tax at the end of the year based on the personal money that you take out of the business. So I'll use Michael's example. So if you earn $250,000, let's say you pay yourself half of that of 125,000, and so. But keep in mind that if you've got another $10,000 to $20,000 in personal items in the business, so you've got maybe meals with your family and a personal trip, because I've seen that. You've got clothes, or you've got other like Amazon purchases. Those kinds of things all add up. And at the end of the year, again, you could be paying an additional 3 to 5% on your taxes based on that money taken out. And so it definitely is recommend that you separate your business and your personal. The quicker the better, basically. And then to answer Paula's question about, do you have any advice on what type of accounts to open? As a new agent, I have intention to set up business accounts to keep it separate from my personal account. So first off, Paula, yes, be intentional. Even if you are just going to operate as a sole proprietor, if you can get in the habit of even like separate banks, so then that way, if you regularly bank with TD, go to RBC, for example. And then that way you're not muddying the waters. You'll keep everything very separate. Now, in saying that, that's not to say that you don't buy personal things on a credit card or vice versa. That's okay. If you work with an accounting professional, they will make sure that everything that you everything that you purchase throughout the year gets entered accordingly. But just be careful of that. So as far as the type of accounts to open, I should have a link for this, but you're going to open up an income account, which is a checking account. You're going to have an OPEX account, which is also a checking account. Then you're going to want a profit account. That'll be savings. Your owner's pay account, which is money to pay yourself. Again, that'll be a savings account. And then there'll be a tax account. I go one step further and I do HST separate as well. Your tax account is specifically for your corporate tax or your personal tax. It does not take into account HST whatsoever. And the reason for that is because the book that was written by Mike Michalowicz he's American. And so the way that they deal with their sales tax is different than the way that we deal with ours. And so I always recommend that sixth account. And again, that one can be a savings account. So only two checking accounts. So it shouldn't be super, super expensive. The savings account should be free, Michael, as far as the fees. But the checking accounts you will have to pay a minimum on. Now, you could pay for the minimum checking account. I think in my TD, I pay $8.95 a month for the one account and $5.95 a month for the second account. So it's not super expensive. And that's where we try and get around that by building out all those additional savings accounts, right? And then that way you can transfer from a savings account into your checking and then pay things in your checking. So that's how I get around having all those banking fees. It's unfortunate because in the US, they have a lot more leeway as far as monthly fees. I have yet to find a Canadian bank, like even Libro, credit union, that kind of thing. They still charge you something. I
I look at I
Sorry,
look
go
at the
ahead.
account types that I have as well, and a lot of them are very low monthly fees because it's limited number of transactions in and out. So, for
Yeah.
example, the one account that I have, it costs, I think, $10 or $12 a month, which is a, simple business checking account because that account has a lot happening on a monthly basis in and out, right? So there's commissions coming in. Hopefully there's a lot coming in. But going out, like as soon as, well, not as soon as, but when the commission comes in, I'll sit down a couple times a month and make those transfers out to the other accounts. So at minimum, I have the one checking account where stuff's coming in. I probably have, I don't know, 15 or so transfers going out every month to the other accounts because I'm taking those commissions that come in and then it goes to the HST account, it goes to the tax account, it goes to the owner pay account. And then I also have things that I pay monthly, such as, the cell phone bill gets paid, other services that I use, such as the stager gets a EFT, and all that kind of stuff happens every single month. So that one account is a very active account. However, the HST account, I'm only making deposits going in a couple times a month, which they don't charge for. And then going out, they charge a very minimal, like $1 or $1.50. However, I'm only doing one HST payout every 3 months, right? So it's every quarter that I pay my HST. If I pay $1.50 to do an e-transfer out, 4 times a year, it's not very costly.
Oh,
Yeah.
that makes
So
sense. Is my microphone working, first of all?
Yeah.
yes, I can hear you.
Well, good morning, everyone.
Good morning.
Yeah, I'm just sitting at 3 accounts right now. So when I think Jennifer, you were mentioning, is it 13 accounts you have?
13. Yeah, I'm super. Well,
It's-
I'm planning so I went to Italy last year for 5 weeks. Next year, I'm going to do England, Ireland, Scotland, and back to Italy for 2 to 3 months. So
Yep.
I'm very, very intentional with my stuff. Like,
Okay.
very intentional.
I remember a couple of years ago, my wife and I, sat down, glass of wine, and started adding up all of the account fees. And, there's that slow bleed where it's same with insurance companies, cell phone plans. If you don't at least once or at least every 2 years, sit down and kind of say, okay, is this necessarily still working for me? So we did a bit of shaving off of the accounting piece. So right now I just have 3 accounts, and I thought I was being prudent. And now after listening to the two of you, I'm kind of like, oh, I got to step up my game a little bit here.
Well, I think the fact that you have 3 accounts though, Michael, is should be recognized, because I think all too often we work with agents that, still have one account for personal and business, and they're just kind of like, you just figure it out with the bank statements. And so, like, kudos to you for taking that step and getting to be intentional with some of your money. But I would question what the intention of each one of those 3 accounts is and how we could really drill down further to help you and see, for me, I use my bank accounts for my goals, right? So like I was talking about going away next year, that's one of my goals. I'm also building this coaching program, so that's another goal, right? So like I have to take from my bookkeeping business to help fund that. And so making sure that I'm also able to pay myself and my staff are super huge. And so it's important for me that I divvy up my money very carefully, because I want to still make sure that as I'm building out businesses and as I'm incurring costs where I haven't received any income for it yet, that I'm making sure that the intention is behind it. And so if I get to a point where I have no money in a bank account, I have to stop, because if not, what's going to happen is I'm either going to not be able to pay myself, I'm not going to be able to pay my staff, or I'm not going to be able to pay my debts to the government. And I don't know about you, but I don't like giving them any more freaking money than I have to at the end of the year. And so, like, if I can pay them the dollar that I owe them instead of $5, I'd rather do that. And so I would just ask Michael, what are some of your goals? And let's see how we can get more intentional with that.
No, it's a great response. This is my first year being with a personal real estate corporation. And Michael, I don't know if you recall, I was bending your ear for quite some time. So thanks for that early on. I'm working through some aspects of it, separating sort of the personal from business. And, I intentionally kept money for 2023 in the account, even though I could have used it to pay off credit cards 2024, but I wanted to have that balance for 2023. So that moving forward, I don't know how much money I'm going to earn this year, but you know, those are retained earnings. So I'm still working out how much to pay myself. But my situation isn't this is it's all as because of my professional life outside of it. Separating those two, making sure that any income coming from real estate wasn't added to personal income.
Mhm.
My other was the goal of setting prep, and now hence the reason I'm sitting here having a coffee, listening to you folks who had a chance to refine this, and trying to soak up as much information as you can without ringing up Michael's cell phone.
Well, I know Michael loves being a part of the real estate community, and he always loves helping others, which is why I love having him be part of the Profitable Agent, because he is all about giving back to the community, as am I. And so I love hearing that you guys have had a lot of talks. Michael, Michael D, is there anything you want to say to Michael M about where he is and about maybe getting just a few more steps, maybe more intentional with where he's going to go this year?
Yeah, I can use a friend of mine as an example because of the situation. And she happens to be like a VP of a very large company and has a very high salary income. And she also does real estate. So when I sat down with her years ago, I was like, dude, first thing you got to do is set up a prac, because if you start taking that real estate income, like if you don't have a prac, you have to take that as income. You don't have a choice, and you're going to pay 50% tax on that.
Yeah.
So, yeah. So what she was able to do is she still has her salary coming in that she has no choice. She has to pay tax on that because that's an income. She's done very well in real estate. She has not touched any of that money directly paid to herself. It has just accumulated inside her prac business accounts. And she has used that money to go out and buy real estate. So she's bought 2 or 3 properties, 3 or 4 properties now. And the benefit of that is she's paid like 12% tax on that real estate money because she's not touched it personally. So to me, that's the huge benefit.
Oh, for sure, that's what I'm hoping to move forward to, because I've got another 2 years left before I am done with the other side of my life. And pension, it's again a very generous pension. That's like, but I still, I don't want to not do anything, and so I'm still interested in continuing this path as well.
Well, and I think that's the other benefit of having, even if you have a long-term plan inside of real estate, in a situation like yours where you say, okay, I've got this pension, and there's situations where I would like to draw from that prac account my real estate earnings. So let's just say, for example, you build up a nice little nest egg in there of, call it 200 grand. Even if you don't use that money to invest, that money can sit there inside your personal real estate accounts. And there are ways, and this is where you have to talk to an accountant, where you can invest that money through the prac into specific investments. I don't know exactly what those are. That's where you have to talk to an accountant, but you could take that money, put it into something, whether it's like GICs or savings bonds or whatever. I have no idea, but you can take that money, not personally, but you can take that money from the prac, and the prac is able to invest that money directly without you touching it personally and without you having to pay personal income tax on that. And that can start to build and grow. And then, let's say, for example, down the road, you've got your pension that's coming in, and you're like, you know what, this really isn't cutting it because I have a certain lifestyle that I want to maintain. I'm going to pay myself, I don't know, $10,000 every quarter out of my prac as a dividend. You can absolutely do that. And you get to do that at a reduced tax rate because you're paying yourself dividends through the prac. Yeah. So there's a lot of benefits to doing it that way.
And it's truly as I'm finding, I wished I'd done it sooner. I had a really good year in 2022, and I got a ton of that gouged back. Just become a victim of your own success when it's getting added to the personal income that you're already making outside of the real estate.
Yeah. Yeah, they really take a whack from you when it's added to personal income.
That
Um,
really hurts.
but no doubt, hopefully 2024 will be your most successful year yet, and then you'll have the benefit of having the prec behind you there. At least you know you've taken yourself from like the 30 to 40th percentile down to like the 10th percentile, maybe 15, you know. There's definitely a lot of strategy. Also, one thing I'm seeing too, as far as investing strategies in a prec, um, is offering private loans. So
Mm.
I've seen a couple of agents where if they have a large cash balance inside their prec, like Michael has said, instead of paying themselves, where they're just going to get taxed more money if they don't need the cash flow to come into their personal accounts. What they're doing is they're loaning this money out as private equity, and they can do it through the prec instead of their personal name. So it's a write-offable business expense. So yes, I would agree with Michael though, talking to an accountant. If you have more than, I would say, $100,000 sitting in cash in an account, then I would also say talk to a financial advisor as well. Accountants
Mm.
are amazing, but they don't know what they don't know, and so
No,
I would take that one step further and talk to a financial advisor if you do happen to have cash, like just a large cash surplus in your accounts.
working on it.
Working on it. I love it. I love it. It's, you know, what's cool too is like paying off debt. So like one thing that we focus in on our program will be paying off debt. So like oftentimes we see, especially new agents will come in and they'll have, you know, again, they'll get their first commission check and they're like, heck yeah, let's rack up the credit cards, let's buy some suits, let's go out and buy a Tesla. And the next thing you know, they're like $10,000 in debt somehow until they get their next check, right? And so we make sure that we work with our clients to make sure that they have we call it a debt snowball effect. So if you're paying money on credit cards, we'd rather see you save money and not pay interest charges and be able to pay CRA that money and pay that money to yourself. And so again, just power of intention. So we can absolutely help you.
CRA is way
CRA's garbage beyond garbage beyond garbage, and they do not have a very good talent pool of people working for them right now, and so the auditing situations are really interesting. Like we've seen a lot of appeals on the rise this last year because there are so many unqualified agents that come out, do audits, and they ding everybody. They will never tell you ways to save money on your taxes, right? That's not their job. But they will
No.
look for every single excuse to be able to penalize you. And so we're kind of like,
hanging fruit. It's too expensive to go after the people that are really making money in taxes.
yeah,
Targets.
it would be nice if they focused on the larger corporations and stopped worrying about the little, you know, little seeds of mom and pop, but it is what it is. And unfortunately, when you're in real estate, it seems like nowadays it's only a matter of when you get audited, not if you get audited. And so maybe this is a great way for us to segue into receipt retention. So I am a bookkeeper, and so for me, I'm always chasing clients for receipts. So I always suggest clients, if you have anything over, I would say $20, you should always have receipts for. If you don't, CRA has the right to deny the claim. So just be careful as far as that's concerned.
So never put $5 worth of gas in your car.
Yeah, well, even if you do put $5 worth of gas in your car, make sure that you have a receipt for it, or
Yeah.
$20 gas. But be careful. It's amazing how many people will buy things and not have receipts. And especially if you're like doing large purchases or you're loaning money, like you've got to have receipts. This is a good segue. I'm going to attach our what you can and can't write off in business. Maybe we can talk about this for a few minutes.
Mhm. Well, and going back to Paula's question really quickly from before,
Sure.
Prex just came into effect a couple of years ago. So it's been about 2.5 years now that we've been able to do a personal real estate corp as a realtor. I've been in the business now 16 years. So, you know, for 13 and a half years, I did not have an actual registered corporation for me to work through. Everything was done personally. And when I got my real estate license 16 years ago, the very first thing that I did is I went and opened up separate accounts. So right away, day one, before I even got my first commission check, I had a separate account over here, which was all my real estate stuff. And then I had my own personal stuff for, my house and spending money and all that kind of thing. So you don't have to have a prac. You can do it personally. And it's just more about the mindset of dividing the money to say, okay, over here, I have my business, I have my business expenses. And the other thing, like I set up 2 credit cards right away. I had one for my personal stuff. If I was going out and going golfing or doing whatever, that was personal. Over here, if I was ordering business cards or signs or paying for photography or whatever, that was all done on the business side. And there's a very big benefit that is kind of hidden between the lines there, where when it comes time for you to do your HST, or you have a bookkeeper helping you with that, or you're doing your taxes, it makes it infinitely easier for you to be able to track all of your stuff. Right. So I know, like, Jen does all of our book work, and at the end of the month, she's spending an hour, maybe an hour and a half a month, consolidating and reconciling all the accounts and making sure that, when stuff goes into QuickBooks, okay, well, this payment was a car thing. This was a personal thing. This was, actually, there wouldn't be any personal things in there because it's just all my business stuff. So it's,
I was just gonna say that. I was gonna say
per,
there's no personal things in there. Like
yeah,
you do transfer money to yourself personally, but that's to in
right.
essence pay yourself, like,
Exactly. So
right?
that's
So
like,
that's different. Yeah.
yeah, so that's like an owner draw for pay. And then, if there's something I buy for the office, or if it's allocated towards a specific listing because, we're paying for staging, consultation, or whatever, it's just reconciling those accounts.
Yeah, absolutely.
Yeah.
So Michael's question, do you write off all of your cellular? So for me, no, I still write off. I'm very much an 80/20 person, but I could write off my cell phone more because I do have an office line as well. Or sorry, I could get away with less, but I want to maximize it. And so I only write off 80% so as not to tip off the government, because I do have an office line. And I try to have clients call me on my office line over my cell phone. But when it comes to real estate agents, you guys are always, always, always like, whatever meeting you're in, you're stopping, you're like, shh, I got to answer a phone call. So it would be perfectly acceptable to write off 100% of your cell phone cost. The one thing I would say is, if you have a part-time job or a full-time job, maybe look at decreasing that to a much more acceptable level, because it would be expected that your employer may call you or someone personally may call you. And so that would be expected, similar to like a home office internet as well. So I write off my internet cost. You can tell I'm in my house here. And so I write off, I think, again, 80% of my internet costs, because the majority of what I do is often these Zoom calls every month. And so that is a safe write off for me. I appreciate that's okay. I know Paula had to go, so I appreciate that. Paula's awesome. She's a new agent, but she's also a manager of a couple home hardware stores. So she's
Oh,
just rock
cool.
and roll, and she's wanting to get out of her own way and join this amazing real estate game. So it's so cool to see that. I love that. So I'm going to share with everybody. We'll go. I know that we didn't have time to do this with Paula on, but I'm going to quickly share the attachment that I just shared in the chat. We'll look at that in a minute. What the heck? Oh, there we go. Sorry, guys. Okay. So just some quick things to talk about what you can and can't write off in real estate. Keep in mind that this doesn't change much between whether you're a prec or whether you are a sole prop. So some things you can write off are your advertising and promo. So if you're buying client gifts, marketing your MLS listings, photography, videography, photos, that kind of thing. If you're doing any kind of drones, those kinds of things are all write-offable. Auto expenses. So it's interesting with auto expenses. more often than not, it actually works out better in your favor as an agent in a tax circumstance to write off your kilometers over your vehicle expenses. Shockingly, even if you have a large vehicle payment every month, that really actually, like, your kilometers sometimes works out to be a better deal. And so I highly recommend, if you're not already using a mileage tracking app or you're not tracking your kilometers, do so. You actually only need to track your kilometers for 3 months out of the year in order to establish your personal versus business use kilometers. So that's kind of nice. Now, in saying that, I do suggest that you have everything in digital form. So if you can get in the habit of having your calendar appointments on your phone, phone call records on your phone, if you have client lists on your phone, like, make sure that the more stuff you have digitally, the less you have on paper form, the better. Because in an audit situation, it's just more proof for CRA to show that you had business intent for those trips. So something, if you are looking at writing off vehicle expenses versus mileage. So vehicle expenses you can write off are your fuel, your insurance, your monthly payments. Now, monthly payments, if it's a leased vehicle, you can only write off up to the first $1,000. So if you've leased a Tesla and it's like $2,000 a month, your SOL, you get $1,000. If you purchase the vehicle, though, there is no limit to how much you can write off. So if your Tesla costs you $2,000 a month, that I'm crying right now just thinking about that, because I'm like, that's a mortgage payment. But if that's your priority, that's totally okay. If your car costs you $2,000 a month, at least if you purchase it, you know that you can write that off. Again, so parking fees, repairs and maintenance, 407 charges. Make sure that you can align this with your schedule to show that, you're not just going skiing for a weekend and then coming home and using the 407 to your benefit. Because CRA really does get nitty gritty with these things sometimes. Other things you can write off are education. So if you go to conferences, so for example, I know right now Family Reunion is coming up in February for a lot of agents. It's in Vegas. I wish I could afford to go this year. I'd love to go to a Vegas Realtors conference. I feel like it would be phenomenal.
It
I
is
heard that,
awesome.
yeah, well, I heard that Tony Robbins and Mel Robbins are speaking this year.
Yes.
And I've just started really falling in love with Mel Robbins. And so I'm really disappointed that I'm not going.
Where does it take place?
In Vegas.
Gotcha. Of course it's Vegas.
Yeah.
Yeah, it's the third week of February. So it's like February 15th to the 17th or something like that this year. And it alternates every year. So they do hold it every February, and it's usually middle of February, and it kind of rotates between Vegas and California. And it's such a huge event, there's only a few places where it can be hosted now. Florida is the other one.
It's a fun event, and I've heard from agents that they get a lot of really good takeaways. As someone that has put a lot of time and effort into conferences and seminars and things like that, you can really waste a lot of your time. You can waste a lot of your money so easily in these things. But I've heard a lot of people have really good takeaways from the February trip, Family Reunion, sorry.
And it's a full write-off as well.
Sorry, it's a what?
And that is a tax deduction as well.
Yes, that's correct.
Mhm.
So if you were to go to Family Reunion, your flight, your hotel, your food would be able to be write off. So if you were there and you were consuming large amounts of alcohol, unfortunately, the alcohol is not a business write-off. However, the actual meals that you're eating throughout the day and the evening would be considered a write-off. And so, for example, if you have staff, let's say, and you want one of your team members to join you on the trip, you can pay them a per diem of, $30 a day, $20 a day, whatever have you, to help cover their meals. And that also is a write-off. So even when you buy books, if you buy audio tapes, you have to be careful with subscription services. Like, I know a lot of people want to subscribe to podcasts and they pay for streaming music and things like that. those you have to be a little more careful about. But if you're just going on Amazon and you're ordering a book and you want to be able to read a book, that totally is a write-off. Same thing with those conference fees as well. We have professional fees. So we've got me, the bookkeeper, your accountant, a coach, a lawyer, whoever else you have in your team. We've got brokerage dues, your insurance, dues and subscription, your internet, your interest. So if you have credit cards that you're using for business purposes, even if they have a couple transactions on them, if they are primarily for business, you can write off the interest on that credit card. Be careful though, if you have like 4 or 5 credit cards, you definitely don't want to be getting in the habit of like over claiming interest either. It really should be whatever 1 or 2 credit cards that you have for business. Another would be licensing fees. So your RAB, your RICO, your TREB, all that fun stuff. Your meals are claimable at 50%. One thing I will mention is if you go golfing, you cannot write off the golf game, but you can write off the meal that you have after golf, by the way. Just because I heard golf already, and that's CRA actually has a specific program in their tax program looking just at golf, because so many people were trying to write off golf club memberships and golf club fees and things like that. And so that unfortunately is very limited. And again, there's no allowance for alcohol. So be careful with how much alcohol you have on a receipt. If you have like 1 drink and then you have mostly food, that's okay. Your bookkeeper should make sure that they're only writing off the meal portion and not the alcohol. But I've definitely worked with some people over the years that like to overclaim the alcohol. So that's a whole other tax deduction, tax form right there.
I heard about a restaurant, I think it was in Toronto, that set themselves up, and it was a bar type restaurant that they called themselves like Office Depot or something like that. And all of their menu items were like box of paper was a hamburger. And
Nice.
you could order a pitcher, but a pitcher was called something else, like, box of staples.
That is awesome.
So you would get this receipt and submit it to your account and be like, man, you've been spending a lot of money at Office Depot. Yeah, okay.
You went there twice in a week for paper clips, huh? Holy cow, you go through a lot of paper clips.
Yeah, I go through about 10,000 paper clips a week now.
Yeah, pretty much. Pretty much.
Maybe when I was younger.
Sorry, Michael, what'd you say?
I said maybe when I was younger.
Oh, yeah. I guess north of 40, it's kind of hard to have that many paper clips every week, right?
Keep going.
Well, I mean, I just said north of 40 because I just turned 40. I wasn't sure. I can't see your face, so I don't know how old or how young you are, but I'm sure you.
I'm not shy about it. I'm having some issues with this computer, and I didn't have time to troubleshoot it, but I wanted to get on to podcast that you already broadcast. But no, I'm, had a shower and everything like that too. I'm just having issues with my camera.
That's totally okay. Well, hopefully we'll get to see your wonderful face next month. Hopefully, if you join us again at the end of February for our next monthly mastermind, hopefully we'll get to see you then, but it's totally okay. I love the fact that you're here and you're just wanting to listen. You're asking questions in the chat. You're hopping off mute. That's exactly what we want. We just want you to be engaged. So thank you so much. Camera's just a bonus, right?
Thanks both of you again for, I've actually got to wrap this up myself. So I'm gonna have to. But I realize I'm 50% of your attendance today. But I appreciate what you're doing.
Well, thank you for sharing that with us.
Anyways, enjoy the rest of your day, folks, and thanks again for putting this on.
Okay, well, thank you so much for attending, Michael. We really appreciate you being here.
Take care. See you, Michael.
Yeah. Thanks for
Bye.
showing up today. I appreciate that.
Hey, gang. Take care.
Okay, well, I'm just going to finish the recording off with the rest of this stuff.
Sure.
I'm just going to quickly go over the website and then we'll go ahead and finish this off because I want to respect your time as well, Michael. So again,
Okay.
I think we left off at office supplies, payroll, rent, sign installations. Telephone, travel, utilities, uniform, what you can't write off. You cannot write off childcare. However, you can put that on your personal tax return. Clothing, again, this includes custom made clothing unless your logo is on it. If your logo is on it, then we can talk. Dry cleaning, grooming, makeup, mortgage expenses, personal meals, personal trips, pet expenses, and snacks. All of those items are unfortunately not write-offable in your business, at least not for real estate. The next thing I would like to share with you guys is our website. So we have been hard at work on our website, The Profitable Agent. We are only halfway through kind of getting this done. So there's still a lot to be done, but just wanted to show you all where we are. So we're working on our website. We've got our mission statement, our vision statement. We're going to have lots of content here for you guys wanting to know if you pay yourselves first. Hopefully you'll help discover the Profitable Agents community. And hopefully you'll want to be a part of that community and just be a part of what we're really building here. We want to make sure that we're always giving back. And so we'll always be looking to add more resources, add back to our community in any way that we can. Just like we were talking about earlier, how Michael always loves having chats with everybody at the office. You know, we could sit here and try and monetize all these chats and things like that, but we're not those kind of people. We want to make sure that we're serving our community and making sure that we're giving back to those that come to us. So that's really what it's all about. Again, if you're looking for more resources, we'll have that. We're going to have lots and lots of free stuff. This will explain a little bit more about where the Profitable Agent has come from and where it's going. Again, we've got some resources and of course the infamous pricing. So this is going to be where we house our course information, which is going to bring you over to Member Vault. So this is where we will have all of our Profit First downloads. We'll have all of our YouTube stuff here. So if you click on this, it'll show you all of our videos. So once we're done today's recording, we'll make sure this gets uploaded there as well. And we also have our self-guided program. So we're currently in beta for this. We're looking to fill it out probably by the end of April. We'll be rolling it out to the first 5 clients. And then we are going to look at rolling this out monthly going forward. So this is going to be really awesome. There's going to be a lot of training content in here. There'll be more explained about that in February. But just hopefully just wanted to get you guys excited about really what is coming down the pipeline for the Profitable Agent. I know we've been doing these monthly mastermind calls for the last 6 months. Some months we get amazing attendance, some months a little less. But what matters is that Michael and I are always here making sure that we're giving you guys useful information. And so even though there's nobody to talk to right now, we're talking to each other and we're talking to hopefully you guys who are watching us today, tomorrow, and in future. Is there anything that you would like to say, Michael? Maybe we'll just do some final thoughts and we'll wish everybody a good day.
Yeah, I've really been enjoying these sessions that we've had together. I find that every time we have one of these, I walk away with some little nugget of information or just a different perspective at looking at things and be like, oh, okay, well, I've been doing it this way. And now if I do it this way, I can either be more efficient or it's going to save me time or money or whatever. Like there's always something that I walk away with out of these and think, oh, wow, that was, an hour or 90 minutes really well spent because I've got something that I can apply to my business to make it more effective moving forward. So I really appreciate these. And, spending time with you is never a hard thing. So I appreciate your time with these two, Jen.
Well, I thank you so much for always being on these calls with us. The value that you provide to your community and your insight is just phenomenal. I know that you bring a unique take because you've got your own experience in the real estate game. You've been a realtor for a long time. Maybe something that a lot of people don't know about you but you've done like lots of your own projects behind the scenes too. So that's one thing I love about you as an agent. You don't just walk into a home and you're like, look, it's really pretty. You're like, hang on, let's look at the foundation. Let's look at this. Let's look at the insulation. And so that's one thing that I really appreciate about you is the fact that you're there for your clients, you're there for your community. And that's why you and I love working together and collaborating in this way. And so I thank you for being here and encouraging our audience. And I feel like it gives them peace of mind knowing that there are other agents like yourself that are in here that are doing it, that are sharing. Because I think all too often we grow up thinking that it's not a good thing to ask for help. And I've learned in my professional career, especially over the last 4 or 5 years since I started paying for coaching programs, that it's amazing what a difference it makes in your personal life and in your business. And just for yourself overall, when you really do just learn to get out of your own way and you do ask for help. And so I know that, I come to you behind the scenes and I ask for help from you for these calls and for other things. And so I'm just so appreciative of getting to surround myself with like-minded people like yourself that want to also raise their community up, and we don't look at it as competition, right? We're just
Mm.
here to help. So I love that. So thank you so much for being here today.
Oh, you're welcome. Yeah, no, I appreciate the opportunity. And, I do love to share the experiences that I've had. And, it's taken me 16 years of screwing things up quite a bit. Both in working in the business and working on the business and all this other stuff. I've learned a lot the hard way. It's been expensive and time consuming. And, if there's something that I can share with somebody that's going to save them that aggravation and effort, I'm more than happy to do it.
Yeah. And same here. I've definitely also had my fair share of headaches over the last 10 years that I've had my business. And so if I can come at it from my perspective and also make sure that we avoid some headaches and some tears maybe and some frustrations along the way, that's really
Mhm.
the name of the game here. So thank you again so much for being on the Profitable Agents call. Again, thank you so much to everybody that was here today. For those of you that are watching in future, don't forget to check us out at theprofitableagent.ca.